Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for Friday, April 11th, 2025. Apologies for missing a few days. I have been doing my crypto taxes, and when you day trade crypto, you have a lot of transactions, and sometimes they double up. And then you have to go through all of your transactions to figure out which ones are doubles to delete them so that you're not paying extra thousands of dollars on your taxes. But now that's done. And so I'm back to doing my 10-minute TA. Welcome. Without further ado, let me ask you to please give me a like. Have you done it? Perfect. Here's a cute little otter for you. All right, let's dive into these charts. Okie dokie. So what we're looking at now, let's just clean up this chart, start over. This bear flag never did get all the way down to where it would have gotten. This head and shoulders did not play out. However, this double bottom that we see here did play out. One bottom, two bottom, played out all the way to the top. But hey, I didn't make a video, didn't call it, so it is what it is. What are we looking at now? Possible double top, actually. Now, where would the double top take us? The double top would take us right back down to where we were. Now, we would want to stop higher, put in another higher low here. Like if we stopped up here, maybe kept 80. If we can stay over 80, then we'd be putting in another higher low, and then we would just need to see another higher high, and then this uptrend could continue. However, whoopsie doopsies. Doop. Oh, right. Let me make this big so anybody watching on their phones can also see stuff. Okay. Double top right there. It would play out back to where it started if it played all the way. We would want to see it play down a little bit and then stop shy of like 80K, putting in another higher low and continuing this uptrend. Well, it would possibly continue in the uptrend. After that, we would need to see another higher high in order for us to say, yep, we're good. We're golden. We're going to keep moving up. But at the moment, we're seeing this double top. What else are we seeing? Well, this is also a rising wedge. We'll make this blue because I like blue. Blue. There we go. We're also seeing a rising wedge here. Now, rising wedges tend to break down. They tend to turn around and head back to where they came from. So we have two bearish signals here telling us we're heading back down under 77. However, if the bulls can hold, like I said, if they can hold over 80, putting in that higher low, then there's a chance for upside. But as of right now, possibly not. We are seeing price action get over that 82 resistance. Has it flipped yet? Technically, no. Wait, what's this one? This one, no. Well, yeah, actually it did. That candle there opened and closed over 82, technically flipping into support. But it does seem to be struggling over here now, doesn't it? And we can see we flipped it to support here as well, and then still came down under it. The main support that really matters is the daily. If the daily can hold over 82, well, open and close a candle over 82, then we'd be back up over it as support here on the daily, and that would be a real good sign. But as of right now, we're just kind of hovering over it here on the 90. We are over the 200, so that's a bullish sign. That's one little bullish sign. But we got two bearish signs. So we're going to be a little more bearish than bullish here. And we're going to say that we're going to see some downside. How far down? Well, as far down as 75, 76-ish. Or it could go all the way back down to the bottom of this upward trending wedge down here at 74.5. I don't want to see it. Like I said, I want to see it stay over 80. If it can stay over 80, then the chance of upside is greater. Let's take a quick peek at the indicators. We'll see the RSI is in bullish territory and pointing to the upside over its signal line, showing upwards momentum. We are, however, lower than this one, than this high here. This high, lower than that high. While this high is also lower than that high. Well, vice versa. This high is also lower than that high. What does that tell us? That tells us that there could be some reversal happening here. Possibly. It's not a div. It's not a bearish div. So we'll see. It could just be a reversal where the highs are now going to come in lower, and we're going to see this downward wedge to the downside. That's if we can break under. If we break under this 79, let's just say $80,000 level, well then yeah, we're going to watch it dump back down to about 76. If it can stay over 80, then there's another chance to push up to that 85 resistance and then see if we can break that. All right, so let's take a quick peek at the 22 to tell us where the 90 may be heading. The 22 is Stokes are down at the bottom of their oscillation, moving to the upside. We're seeing no bullish div here, but we are seeing the RSI staying in bullish territory and just barely coming up over its signal line. So let's watch and see if that can actually happen. We're seeing a kind of a double bottom here on the 22. Will be more visible here on the 5. Now this kind of double bottom, since the sides don't go up as high as the middle, what you would do is you take an extension of this double bottom. Look at that, we're above the 200 on the 5 as well. Extension, move it to the shoulder line. Well, not the shoulder line, but you know what I mean. And that extension will bring us up to 84,135. Let's see if that can happen with this little double bottom here. 1 and 2. It's kind of a wonky one, but it's there. Let's look at the 1 real quick. The 1 minute. Ooh, let me make this bigger. The 1 minute over its 200. That's good. Bottom of the stochastics. That's good. We're going to see some upswing. Now what we want to see is higher highs. We want to see some higher highs, man. If we can get these higher highs, then we could say we're going to keep going up. If we cannot get those higher highs, then most likely that downside from 90 is going to play out. Let's take a quick peek at the 6 hour. Haven't changed this one up in a little while, so let's dive in here and see what's happening. Let's pull this fib retracement out a little more. Right there. Can even pull this one a little bit this way. Here we go. And we're still kind of in the same spot to, invalidate this bear flag. The bear flag's still technically there, man. This is now a resistance. Now a resistance. Got to get back up over that to have any chance of, getting up there and invalidating this bear flag. The bear flag kind of looks a little wonkier now, a little different. It's going to be more like so. Make that blue. That's the new bottom trend line for this bear flag. This massive freaking bear flag here. Alrighty, well, let's see if we can get back up over that red line that's now acting as resistance. We got these resistances that we also have fallen under. We can extend those out as well. These are all now lines where we want to see price action get over. Or where we'll see price action find some struggle. You'll see it's kind of struggling right now at that resistance. If it can break over, though, we can see 85. If it can break over 85, then possibly get back up over that 200. Then we're cooking with fire, man. Maybe we got some chances there. But as of right now, this 6 hour chart still looks pretty bearish. The Stokes are in overbought territory, but the RSI is in bullish territory. It is showing a bit of a double top here on the RSI. Will it come back down? Maybe. Seeing that same double top as on the 90. Whoop, whoop, right? Whoop, whoop. If that double top can play out, then you know where we're going. We went over it on the 90-minute chart. But yeah, the 6 hour still looking fairly bearish. Bearish patterns, not really seeing any bullish patterns. Well, there's a bit of a divergence here on the 6 hour. Okay, there's a bit of a divergence here on the 6 hour. Bullish div. Here we see RSI putting in lower highs, while here we see RSI putting in higher highs. We're going to make this green so it stands out against that blue line there. We'll make this one green as well to tie those two together. There we go. We got some bullish div. Okay, let's see if that bullish div can play out. We need to see a price action get up first over 84 and then get up over 85. If not, well, you know, maybe probably like the 90-minute chart said, we're going back to the bottom of this trend line, the bottom of this bear flag. Where's this bear flag telling us we're going now? Well, we can move this measured move. We can move it to where price action is currently. How about that? If we see the drop from here, then 66.5 is our target. Ouch, but possible. Okay, let's quickly go over the daily. Ran out of time, running a little bit long here. I know I'm at 11 minutes now, but I'm going to go over the daily real quick. Daily, still pretty much where it was before. You can see we haven't gotten back up. Came back up to the 21 here. Possibly going to form a head and shoulders here. Possibly. Let's watch and see. But we do need to get over that 200. Where's the 200? It's up here by 87. If we can get back up over that 200, we're cooking with gas on the daily. But really, we want to see the daily get up over that 82 first, flip that to support, maintain that support, possibly give us an inverted head and shoulders, and then keep moving from there. Although I wouldn't be opposed to seeing a move back up over 85 just real quick, blasting through it. That would be great. I don't think that's going to happen, but it could. We're still seeing this double bottom on the daily. If that plays out up to 94,000. We're still seeing this bull flag on the daily. If this bull flag plays out, we got to move up to, well, let's move that back up to where we were coming from, up to $115,000. Still a chance for another new all-time high. However, as long as we're under that 200, I wouldn't hold my breath for it. I would be more so looking for the downside than the upside, but the possibility is still there. As long as we're under that 200, I'm going to say it's a lot lower than it was before, but it's still there. This double bottom can play out and bring us back up over that 200. That would be great. When would that happen by? Probably about the end of April. If we were to see it, that's when it would happen. Maybe early May, but that's when we would see it if it is going to happen. If it doesn't happen, if we see another lower high, then this downward trend is just going to continue. But this downward trend, this downward wedge, will break upwards, should break upwards, come back up to its beginning position or slightly lower than that. So maybe we'll come up to 100K. Maybe we'll see that all-time high once again. Right now on the daily, we still got a bull flag. We got this downward trending wedge, which is actually a bullish signal. We got this divergence, which is also a bullish signal. So we got 3 bullish signals, 1 bearish signal. So I'm still bullish on the longer term here. Longer term as in like not the coming day or week, in the next few weeks, still kind of bullish, but pensively, still very pensively. Why? Because of that bear flag on the 6-hour chart still, because of the bearish signs here on the 90, because if we don't get up over 85 again, or that 200 again, then we are, of course, SOL, gonna be heading to the downside. How much further down? We've talked about that, probably down into the 60s, around $66,500. As far down as. But hey, we got that bullish div here. So maybe things are changing. All right, I got nothing else for you. Thank you so much for watching. Music was provided by Luminous, Veloa, and Sax Squatch. You guys are awesome. Thank you for tuning in. Much love. See ya later.